All right, guys, I hate to say it, but Wall Street is absolutely rallying, absolutely planning to just have this gangbuster summer through the rest of the year. But unfortunately, it's kind of based on something that I don't think is true, that I don't think is going to happen. So we have to talk about it today because when it doesn't happen, it's probably going to hurt a lot. So let's discuss all the ins and outs of it today. Let's get into the actual details of what needs to happen in order for this to happen and just everything involved with it. Right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Now, obviously, we've seen a huge rally in a lot of our stocks and obviously the NASDAQ specifically. But I mean, come on, we got Tesla up more than 100%. Meta up, just craziness all the way around. Basically, stocks are running. The market is starting to pick up steam. We absolutely, as we discussed in the last video, are seeing, actual market technical indicators that basically mean you're crossing that threshold over into a bull market starting to happen and starting to kind of tick off one by one. So everything is kind of pointing towards, this run to continue and everything kind of getting better. But kind of one of the things that I wanted to discuss today and the big reason behind this rally is, basically behind the notion that the Fed is going to start cutting rates this year. And unfortunately, guys, I'm not trying to bust anyone's bubble. I'm not saying we're going into oblivion or anything else like that, but I just don't see the Fed actually cutting this year, at least not as early as June, July. I mean, we had people predicting June and July way back, 2-3 months ago. Here we are, it's June, July. We're not there yet. Surprise, surprise, right? But nonetheless, that to me is kind of a false expectation that's there. And if the Fed does indeed actually stick to their plan and does not cut this year, as they've said they aren't, now I'm not saying that's guaranteed or anything else like that, but there's a good case to be made for them not doing that for the rest of this year. If that happens, it's going to tamp out some of this rally here. Now, again, I'm not saying we're going back down to the lows or, we're visiting the, October lows or anything crazy like that. I'm just saying for this rally to continue, Wall Street has to get it out of their head that the Fed may not cut rates this year. Now, I know I already hear a lot of you guys screaming. Everybody's been out there talking about rate cuts coming this year. Like I said, some folks were saying it in the summer. Some big YouTubers were saying the summer. Now they're kind of saying, well, maybe by the fall they'll start doing it. Of course, everybody kind of kicks their can down the road, right, as it doesn't happen. But where exactly am I getting my narrative that I don't think that's what the Fed's going to do? Now, I mean, I can just take what the Fed said on face value, and actually for the past year plus, they've actually executed to what they've said they were going to execute. But I understand people thinking that way. But what I think a lot of folks are failing to remember is back when this all first started, they decided they got to raise rates, which I agree, they were way behind. They screwed that all up. But when they started raising rates, they said one of their big fears was not just over tightening, but the opposite, doing and repeating the mistakes of the 70s. And the mistakes of the 70s, when we just couldn't get rid of inflation, it just kind of would bounce up and down, and you had all sorts of just craziness going on in the economy. I understand there's a lot of other things going on too. But in general, in terms of what the Fed can control, the Fed routinely made the mistake of cutting rates too fast. They didn't allow the rate cuts to really sink in, to really kind of squelch inflation, and then that way allowing us to get out of that. They didn't do that until Volcker basically vocaled inflation into oblivion. Until we had that happen, we couldn't get rid of it because we continued to cut too early time and time again throughout the 70s. And the Fed has said repeatedly that's one mistake they're just not going to make. So for me, let's kind of talk through specifically why that holds true and why I don't know why everybody's saying the Fed needs to cut. There's no indicator out there that's telling me they need to cut. There's no reason for it. So let's kind of talk through some of the common narratives that I'm hearing out there, that I'm seeing everywhere, not just on YouTube, but I hear it in the media. I hear it, obviously various places I travel to. I'm hearing it everywhere in regards to this. And basically the Fed has everything they want right now. We still have record low unemployment. The economy's still humming along. Everything's kind of happening. And in order for the Fed to cut rates aggressively, like they have in the past, something has to break. We have to have some giant, actual crisis, not a media crisis, an actual crisis to actually have the Fed do something like that, like the whole world shutting down, right? Or like the global financial system completely, if I could talk, the global financial system completely collapsing around everyone. Not this, bank, whatever the heck that thing was that I said was no big deal, but everybody freaked out about it as if it was 2008 all over again. Nothing could have been further from the truth. But not crises like that, but actual crises. What do we have out there? What is on the horizon? If one of those things don't happen, I'm sorry, I don't see a scenario where the Fed needs to cut rates. And remember, last June we had mass layoffs and everything was in chaos. And no, we actually have record unemployment is actually what we have. Like I said, unemployment is record lows. It needs to get into the fours, and we can't seem to get up into the fours. So we need it to be in the fours just to be normal, just to hit normal times, much less in a crisis mode, right? You want to talk about 6% unemployment? That's crisis. Yeah, we may need to cut there. 3.9, 3.7, whatever the heck we're at right now. Sorry, that's not a crisis, and we're not seeing huge upticks in it and anything else. And like I said, we have to get back to normal, so that 4 to 4.5% range, before we can even discuss being in some sort of a danger zone of some sort. So we're a long way off from normal, much less the danger zone. So employment is doing exactly what they want. The economy is not in this giant, horrible recession like everybody was predicting last year, right? It was going to be the great, recession 2.0, and some folks were even saying it's going to be a depression. I haven't seen it yet. I'm sorry. The numbers don't support that. What's going on out there in reality doesn't support that. I'm not saying it's great. I'm not saying it's the best economy ever or anything else like that, but nothing is supporting that narrative of we are in a recession or a deep recession, deep depression, something like that. It just isn't there. I mean, here we are. We're on like the 4th earnings season in a row where we're supposed to have the earnings apocalypse, and it just hasn't happened yet. I'd agree. If we had an earnings apocalypse, yeah, that would probably be reason to cut the rates. But we haven't had it yet. And I know a lot of folks want to point to the economy and what's going on there and what people are doing and all these other things that kind of get thrown up. But here's the reality of that in regards to it being a crisis or not. We had almost 10% inflation and people were still spending at record levels. We're seeing record level spending this year on travel, on all sorts of other things like that. We are seeing record levels of spending. That is not a crisis. Maybe a crisis for a different thing altogether in regards to the people getting themselves in trouble and continuing to spend all their money and all that sort of stuff. But in regards to the actual economy slowing, it's not slowing at this crazy crisis type pace where you need to cut those rates. It's just not. And no, I don't care about the political nonsense either. It hasn't mattered in over 40 years, and it's not going to matter now as well, regardless of what the media is, regardless of what everything's out there. The idea that this time is different, I hear that every 2 years, right? It's just not. In regards to the market, in regards to what the Fed's going to do, it's just not going to happen. We're not seeing that chaos point from that or that crisis from that to where all of a sudden we, need to cut rates. It's just not there. So again, these are all just narratives and media-driven type things that just aren't actually coming true. So why, as the Fed, if you're trying to not repeat the mistakes of the 70s and stamp out inflation, why would you lower rates when you're not seeing those type things happen? To me, the most likely scenario is the Fed actually doesn't break anything. Inflation continues to come down. The economy does slow and slows further. And maybe we have a little bit of a technical recession like we had last year, right? I mean, it was the most benign recession ever. But maybe we have a little bit of a technical recession. Maybe we have a mild recession at worst. And then after all those sort of things have kind of played out, then the Fed can start letting off the gas a little bit next year in 2024. That to me is the most likely scenario. Now, of course, there could be a crisis out of nowhere, right? I mean, nobody had a pandemic on their radar, right? Nobody had that in regards to things that are going to bring down the market or cause the Fed to have to act how they had to act in that particular scenario. But barring something, large like that, black swan event out of nowhere, there just really isn't a practical reason right now for the Fed to actually cut those rates in 2023 if they're truly not trying to repeat the mistakes of the 70s. Now, you're right. Jerome Powell has been off on a lot of things, so maybe he's going to repeat the mistakes of the 70s by letting off the gas too soon. Who knows? But I know he has been saying the right thing for over a year now in regards to that. And so if they stick to that and they don't, kind of cave to the pressure there to cut this year, basically start their cutting in 2024, I think that, that's the decision that they're going to make. And unfortunately, Wall Street isn't going to like that. Now, again, I don't think we're going back down to make new lows or anything else like that, but it may provide some opportunity in some stocks there, and it may kind of tamp out this rally a little bit. Again, not going back down to all-time lows or anything crazy like that, but it may very well tamp down that rally because right now I know Wall Street is kind of calculating that the Fed is going to start cutting rates sooner rather than later, and I just think it's going to be later. And remember, if you want to take those 5 courses for free, see all my buy and sell alerts, learn how to do that valuation that we're discussing here, have the best group of 6 and 7 figure investors in my Discord helping you out, tons of exclusive videos. I mean, literally, guys, we got a stock analyzer tool. It's coming. It's going to be free for members. There's just more in there. Check out the pinned comment down there and see everything that's involved. See if it's right for you. And click this video here to see the stocks I'm buying now, and click this video here to see my exact plan during this market. So thanks for watching, and we'll see you in the next one.